Welcome to the Movers and Shakers podcast, where real students are doing real deals in the world of multifamily real estate. I'm Vince Gethings, the owner of the Wheelwell Profits Academy. Listen in as we dive into the journeys of driven individuals who are turning their dreams into reality. These people are just like you, taking action and making things happen. If you enjoy the show, please like, subscribe, and if you're ready to take action, check us out at wheelwellprofits.com to learn more about our incredible community. Let's get started.
Hello and welcome to the Movers and Shakers podcast. My name is Gino Barbaro, one of the co-founders of Jake and Gino, multifamily investor, educator, father, and mentor. My guest today has been a Jake and Gino student since 2019 and was featured on our quarterly Closers Club webinar, CC5. Nick DeLeon has 20 years of commercial real estate experience as a senior asset manager at one of the largest real estate owners in the world, Nuveen Real Estate. Today, he's a full-time investor running all aspects of his company, Leon Real Estate, which should actually be Leone. What a great Italian name, which he launched in 2020. Today, he owns over 1,000 multifamily units and an RV park lots as a GP. Welcome to the show, Mr. Nick. How are we doing, brother?
Thanks for having me, Gino. Doing awesome.
I remember the first time we got on the phone call, Mr. Nick DeLeon, working as 20 years, and he's like, how do I get into this multifamily thing for myself? I'm making money for others. How do I do it for myself? And I'm like, this guy's in California, don't know how we're going to bridge that gap, but he's smart enough to figure it out. And 4 years later, he's on another podcast with us in 1,000 units. Nick, why multifamily? What drove you to pick up the phone, call Jake and Gino, and want to do it for yourself?
Yeah, I've been thinking about, thanks again for having me, Gino. Been thinking about doing something on my own for a while. And it took 3 punches in the gut to really do it. I worked for Nuveen Real Estate for 15 years. They have $150 billion of assets under management. First in New York, got a job transfer out to San Francisco. And I got laid off from that job. It's like, oh, crap. Then I quickly got another job as heading up asset management in a value-add industrial shop in San Francisco. 2 years later, got laid off from that job. Oh, crap. So my wife was like, and I was listening to the podcast, and it's really kind of the inspiration, your podcast, seeing these other kind of people doing multifamily. I was like, you know what? I want to do this on my own. I'm going to move to a really great market. My wife is like, we got to get out of California. There's a lot of reasons why we don't like California. Moved to Dallas, Texas, and then COVID hit. That was the third punch in the gut. We moved a month before COVID hit. So after 3 punches in the gut, it really took, because I was scared to start this up on my own because I had the safety net of a W-2. That's what pushed me to launch the company. So I launched the company through COVID. Multifamily, it's a great asset class. I have background in it. I was an asset manager, some Class A multifamily properties in Portland and Redwood City in California. So I had some background in it, along with other property types. But everyone talks about it, but there's a shortage of housing, right? So it's just a great asset class to get into, and it's always going to be there with strong returns.
Let me ask you, Nick, you said 15 years at the first company. How did it feel? I mean, like, to be like, go, what was that feeling like? Even the second one, you say punch guts, but I've had students who have said that, I remember one comes to mind, his name is Mark. I remember him at one of the boot camps. It was in July. And he's saying that when he got let go, he was sitting outside his office. He had been working there for 20 years. He had built, and it wasn't just the money but it was his life. He had put so much energy and effort and love into his job. And he's out there sitting on the curb, looking up the building, saying to himself, I'm never going to be able to get back in there. All that I built was for them and not for me. How did it feel for you after 15 years saying, you know what, see you, we don't have room for you here anymore?
Honestly, it was, I fell into a depression. It was part of my identity. It was part of, I mean, men oftentimes identify themselves through their business and their work, and it was part of my identity. So it was very, very hard. It wasn't really reflecting back upon it like a few years later. I'm like, wow, I was depressed because it was part of who I lost. It was a death. It was a warning. Right? I lost a part of who I was. So thankfully to you guys listening to the podcast kind of gave me that that boost I needed to kind of launch it. 100%.
You had a lot of the moving parts already. You had the skill, you had the intelligence, you got the last name DeLeon of Lion, bro. I mean, like, come on, you can't get a better last name than that if you want to take action. Let's talk about the asset management aspect of it, because we talk about buy right, finance right, and manage right. And, you know, to me, I think one of the things that separates Jake and Gino from almost every other educator is that we don't focus on the beach. We focus on doing the work and being an asset manager. And if you're not going to be an asset manager or property manager, not saying that you have to be, but you have to have someone in that seat, and you have to have expectations with that person, and you have to know how to drive that seat. So your experience coming from that part of the business, how did that translate into multifamily and asset management as well?
Yeah. So, you know, when I started Nuveen, I started building out computer systems and processes. So I was a process IT person that pivoted, got my master's degree at NYU in real estate, made that pivot to the business side, but I always have that mindset. And it's the less sexy part of real estate. I'm a deal junkie. I love doing deals. You get excited over the deals, right? But if things don't sit right with me if the operations aren't going well. And that was kind of my background. So I learned a lot of institutional processes that I was able to apply to some of our properties. You know, standard stuff like you protest, especially in Texas, you protest taxes every year. We engage with professional companies, CMI, they're a big outfit here in Dallas. They do a lot of the tax protests in Texas. We protest taxes. And we're going to talk about our Waco deal, but that was one of the things they weren't doing. They didn't protest taxes. It was the standard out-of-state California owner not focusing on the property. We protest taxes. We always bid out insurance, make sure we get the lowest insurance, right? We have metrics in place. We go over the delinquency every single week, and we make sure in Texas, thankfully, you know, we can get tenants out that aren't paying. In some of the blue states, it's a little bit more difficult to do that. So we have certain metrics that we follow every single week with our property managers, one of our calls. And a lot of those metrics come from my Nuveen days and from my other job at the industrial value add shop.
When you say you listened to the podcast and that inspired you, what else did the community give you when you joined? Because if anybody out there saying now's not the right time, you're going to compare 2020, the uncertainty, the shutdown, the fear back then, and taking the leap back then, as opposed to now when there is uncertainty in the market, but it's much better for buyers right now in the market, especially if you're going to start. What did the community give you? How did it help you out to launch your company?
Yeah, I mean, well, there's two things. I will say one, we always talk about there's never a good time just to start. But I will say this is one of the best times to get in and learn. If you're new to multifamily, learn. I have 3 analysts on my team, and I'm teaching them how to underwrite deals. And I'm spending a lot of time teaching them. But this is a great time to learn because there's less deals than there typically are. It's maybe a little hard to get deals done. That's the best time to learn, right? Because maybe you have a little bit more downtime and you can make mistakes, and brokers are more willing. I have brokers calling me all the time. I saw you download that CA. Are you going to make an offer on the deal? I'm like, no, you're still asking too much for that deal. I'm not going to make an offer on the deal. But like the fact that brokers are calling you is like amazing. You weren't getting that a few years ago. So it's a great time to do it. As far as the community is concerned, I would say 70 to 80% of my partnerships, I have 10 deals as a GP. 70 to 80% of my partnerships are either through Jake and Gino students or people that worked at Jake and Gino, right? So you've minted a lot of great entrepreneurs through your company that I partnered with. So this is a limiting belief. You know, I thought I was coming from the institutional background. I didn't have acquisitions background, but I have asset management background. I could just do it myself. You know, I don't need anybody else. I could do it myself. And you learn through the community. No, you have strengths and weaknesses. My background was asset management, operations. I was really good at it. I wasn't good at the acquisitions piece. I kind of touched on it lightly in my other jobs. I needed someone that can kind of do that piece. I also learned through the community that I'm really good at capital raising. I love the capital raise and talk to people and make money for people through their investments. But that was the main kind of blind spot. I thought I could just do it on my own. You really need, it's so cliche. They say real estate is a team sport, but it's so true. That's the main thing I got from the community.
I need to highlight what you said because we were just on a monthly mastermind call last night with the community. Every month we host a mastermind call with all the students in the community. And it was said a couple of times, what you just said about brokers reaching you out. If you're going to sign that confidentiality, they're going to reach out to you within 10 minutes. It's amazing. Whereas a year ago, you would be good luck trying to get somebody to call you back. And that's a great thing. Transaction volume is down 60%, but that's because sellers maybe are not motivated enough to sell. You see these lenders extending. How much longer can they extend? How much longer is this economy going to be what I call in a silent recession? We don't know. But once prices tend to adjust, you need to be there. Brokers are putting deals on LoopNet. Go on LoopNet right now. You're going to find deals on LoopNet. This is very similar to what we had back in the day. So it's really important to look at what's going on and really to focus on creating those broker relationships because those deals will be coming. I promise you, as Nick is alluding to you, it may be challenging to find deals, but there's so many other things you could be doing. You could be learning the asset management side of the business. You could be finding other partners to partner up with. You could be finding investors. You can start up an amazing mastermind group that like Nick has, a monthly meetup right now to get yourself going, to make those connections. So there's so many things you could be doing other than just sourcing for deals. And I think this is a great time to get yourself going because when the floodgates open and there's going to be a lot more deals, you are positioned properly. Now, you talked about on Closers Club 5, that deal that you want to talk about right now. Let's get into it a little bit because I remember when you showed us the deal, I can't believe the price point you got. And go back to Closers Club 5 on the YouTube channel. Go listen to Nick's presentation. It was awesome. He takes a much deeper dive into that deal. But let's talk about the specifics because it seems as if you're going full cycle on that deal right now.
Yeah, no, it's a great deal. I mean, so kind of a little background too. My wife, when I was kind of starting this business, we're used to kind of W-2, getting a salary. For a year, I didn't get a deal. In DFW, I just got back from a conference. This one guy on this panel is making an argument that DFW market is the most competitive multifamily market in the world. And, that's arguable. It's arguable. But at the time, it's super competitive. So my wife's like, look, you might have to go back to get a W-2 job. We don't get a deal. So I'm like, okay, she's busting my chops here. I need to kind of think outside the box. So let's look outside of DFW. Let's look within Texas. Let's look in some tertiary, secondary markets like a Waco, Texas. It's still all along the I-35. It's about 2 hours south of Dallas. So we started looking at this deal. I ended up partnering with somebody that lived in Waco. His wife was a professor at Waco, so he was a really good partner. He had an institutional background like I did. And it was a fully marketed deal, but we were aggressive in pursuing it. And we ended up getting almost a $300,000 retrade because there was some issues with the financials. And we also did a loan assumption through Fannie Mae, which allowed us to get a good price per door, 61 per door, because the interest rate was a little bit higher than market. Market was about 3%. This is about 4.76. So we got a great deal. But a lot of value add investors were scared of this deal because they thought it didn't have enough value add. Not scared, but they were just like, there aren't enough units to renovate. I need to push rent. But through our kind of institutional background, we looked at the financials. We saw that the real estate taxes were too high. Insurance was too high. This guy didn't protest taxes for 2 years. We ended up buying this thing for almost the price he bought it for because he just kind of ran it into the ground. And then a little story was the property manager, when we visited, she had a little Post-it note on her monitor that was basically her rent card, written out. So I'm like, okay, that's a little bit old school. I'm like, when's the last time you updated that rent card? She's like, it's been about a year. We haven't pushed rents because we can't push rents through COVID. I was like, this deal's going to be solid. This is going to be good, right? So it was really just a management play. There wasn't a lot of value add. We did, Nick Abeluxon, who's also part of the community, he implemented some laundry machines. He got CSC kind of kicked out. bought his own laundry machine. So we kind of talked with him and collaborated with him on that. Did that. We add a lot of value to the property, but it was really just a management play. And when we bought the property, the trailing 12 months income statement was $250,000. We have the NOI up to almost $700,000 at this point.
Wow.
So it's 170% NOI growth, like amazing NOI growth operationally. And it's really just focusing on that asset management piece and chipping away at wood and just, really crushing that property.
And your exit strategy was to buy, I don't want to just say renovate, because this is valuation, not through renovation, but through operation. And I think, Nick, that's one of the things that we preached a couple of years ago. Everyone's just fixing, flipping, going in, changing, fixing a few units. Great. That works until it doesn't work. And we've seen that not work over the last year or two. You've got this thing up. What was your exit strategy for this asset?
Yeah. And to your point, Gino, you talk about finance, right? Every single one of our deals was a fixed rate loan. 10 deals, fixed rate loan, no issues, no floating rate debt. And that's where everyone's having the trouble. They bought the past 2 years, 1 year floating rate loans. They're in trouble. So the business plan was to refi in about 2 years. Interest rates are much higher right now. But because we increased the NOI so much, we reached our exit price, right? So our exit price is around 88 a door. We got there, right? Now on the back end, kind of talking about the sale, we heard that the Fed was going to raise interest rates. No one knew how fast they would. But at the tail end of 2021, maybe 2 or 3 months after we bought the property, we're like, holy cow, they're going to raise interest rates and the prices are going through the roof. We bought that property for $61 a door. There was a property on the market similar to our property 3 months later for $120 a door.
Wow.
So the market just went crazy. So we're like, let's try to sell this thing fast. So we put it on the market. We had it in contract for $106 a door. But because the Fed kept raising interest rates, the buyers kept decreasing the price. So we're like, okay, let's take it off the market. The property's still performing well. Fixed rate debt, we're good. Take it off the market. We put it back on the market in 2023, summer 2023. Again, it was a fully marketed deal. A lot of times the off-market deals are broken in some way. Fully marketed deal. We had 20 tours. I think we had 10 offers. And we picked the strongest buyer. And this guy is a big Texas guy. He lives on a ranch. And his word is his bond. He's like, look, I never retrade deals. The price that I put in, I'm not going to try to, nickel and dime you or reduce the price before the due diligence period ends. And he kept his word. I'd still try to sell to this guy if I could. But supposedly he had a really big investor who was going to write a $2 million check. He got served force papers 2 days after Christmas. That guy's like, I'm out. And they had to back out. So that was our second buyer. So now we're in contract with a third buyer. Thankfully, we got to keep almost $100K of earnest money, non-refundable money. So that helps our investors. And we just had another $70K go hard last week on it. And they say they're going to close early. And we're projecting maybe a 16, 70% IRR. We should hit about 22, 23% IRR, the 1.7 equity multiple with some really happy investors.
And what the crazy thing about it is that deal that traded for $120 a door, I'm assuming they probably got bridge financing on it. And that thing is going to go from a 4 cap to a foreclosure, as the Bill Hams likes to say. And it's really important. I want everyone to stop and reflect on what Nick just said about the finance right portion. We have not been preaching at all with short-term bridge debt. Unless you are really experienced, you can really have a team that moves their ass and can get the job done real quick. That's the only way I would use short-term bridge financing. We've been preaching longer-term fixed-rate financing. We use something called loan-to-cost, where we get a 5-year term with a community bank or a credit union. It gives us the ability to have a little bit of time, because there's 2 ways you lose money in this business. You either run out of money or you run out of time. And there's a lot of people right now that are running out of time and money as well. So the finance right portion is really important. That fixed rate long-term financing. Your 10 deals, you can sleep at night. If values drop, you don't care. The only time you care about the value of your property is when you buy it and when you either sell it or refi or exit it. Every other time, the value doesn't matter. As long as you can pay your debt and you got a little more cash flow going on, that's great. I'm excited about this, brother, man. You got me fired up over here.
Yeah,
This question is really important because I want you to walk me through the psychology of what you look for in a buyer. You have been a buyer, and now you're a seller looking to sell to a buyer. What do you need to exhibit as a buyer to show up to have Nick DeLeon sell you his property?
Yeah, no, it's a great question. You know, I went through, the first time I was introduced to syndication was my last W-2, the industrial fund. We went through these buyer interview processes, and we were selling a property in Plano, Texas. And the guy was like, we're like, where you get your capital from? Because I was used to be dealing with big funds, big institutions, right? Texas Teachers was like a big LP in one of our deals. He's like, we're syndicating the deal. I'm like, you don't have the funds raised yet? What is that, right? So right now, it's very hard to raise capital. I know some really big investors that can raise $100 million just going on Instagram because they have a big following. Before now, they're having trouble raising capital. So the first question is, where is your capital coming from? Do you have a fund? A lot of people are raising funds, right? And have the equity pre-raised. Where's the capital come from? Are you a family office that just has a lot of money that can kind of put money to work, right? You know, and as part of the buyer interview process, you have a questionnaire. Have you retraded a deal? Which means like right before the due diligence period expires, did you try to lower the price, and was it a justified retrade? Versus our current buyer, if you try to retrade a ton, I went through like a fact-based process and basically went through each item and made sure that like, hey, does this make sense? Most of the items didn't make sense, and we kept the low retrade very, very low. So all of these questions, you have this questionnaire, you go through the broker, all these questions, where's your debt? You know, how you financing the debt? You know, how you financing the property? Are you going to use bridge debt? How much CapEx? You can ask them this. How much CapEx do you have projected? You know, number one, you know, you want to kind of know that generally how they're underwriting. But number two, do they have buffer if interest rates pop up, right? Can they continue to kind of like perform and buy the property? And then just overall, like their track record, right? So the Jake and Gino community has a lot of experienced people. There might be new people. Some of the new people might partner with the experienced people. They leverage their background. You want to see that person's track record, how many deals they've done. Are their deals performing well, right? I know a lot of people at my meetup, DFW, that have floating rate bridge debt. They're too busy to even look at deals because their deals are so distressed. Our deals are performing well. No LP capital calls, still distributing capital. Our LPs are happy. So that's another question.
Nick, you touched upon the difficulty of raising capital. And as we're recording this in Q2, we just had Perry Zhang on a Monday masterclass for the Jake and Gino community. It was great. I love Perry. He has Cash Flow Portal. And he made a really interesting observation that I didn't even think of. But right now, a lot of operators are having problems with capital calls, like you said, and distributions being paused. Limited partners are in their own little community talking to each other. You know, your input shapes your outlook. So when you have LPs talking about deals not going good, it creates fear. And when you're listening to the TV and the news and interest rates are high, there's a lot of fear. So that's one of the main reasons, I think, why it's difficult to raise capital. It's not because of the deals, it's because of the sentiment, and you have a lot of negativity. And when people get together and LPs share war stories, and this is not all LPs and this is not all operators, but it tends to be a lot. And when you hear it, I mean, it's very easy early on to raise money when deals are working really well. But as they start to be, not performing like they were. And this is something else that's optimistic as well. This is why you need to get in right now, because there's less demand for these assets. Because if you can't raise capital, and there's going to be less people where we have these calls to action, and brokers know that. So just hang in there, everybody. If you're listening to this right now, give yourself some more time, because this will all shake out. I mean, deals will come back online. And then I've noticed in the perfect world, there is never a deal and money. You either have a bunch of deals and no money, or you have a bunch of money and no deals. Very, very limited time to have both of them come together. So don't make excuses, because like Nick said early on, it's never the right time to get in unless you're ready, until you have the ability to say, wow, I gotten fired twice. Started during COVID. I mean, that's it. I had to start. It wasn't the right time for Nick to start as well. But Nick, as you're exiting this deal, talk to me about the future for you in multifamily. How do you see yourself building? Because I see yourself building what we call at Jake and Gino an enduring organization. I love the scalability you have. I love the market you're in. Hey, every market is competitive. Go to Phoenix. Go to Nashville. I mean, go to New York City. Go to Miami. All these markets, if it's a great market, it's going to be competitive. People want to be there. I mean, that's the reality. Low cap rates, less risk, more demand. That's the reality.
You got to stick with it, right? Like the book by Angela Duckworth, Grit. It's like the number one trait in being successful. Can't give up. Most people give up right before they're kind of about to hit it big. So in a competitive market, non-competitive market, you have to be consistent every single day, hitting the phones, talking to brokers, underwriting deals, making offers. Our pipeline is very light right now, but we're still making offers. We're using an opportunity to build relationship with brokers. I tell the brokers, send us every single deal you have, because my analysts need to kind of underwrite deals. And I'm learning too. I'm getting to be a better underwriter, because that wasn't my strength before, right? One of the things we're doing is kind of a little tidbit. I'm having my analysts, every single OM we get and they underwrite, they're putting it into a database with all the different ideas for value add. So it's like carport. There's the standard stuff, carports, renovated units, all that stuff. Now we have this database and kind of like how much rent premium you can get for these things, the cost of these things. And now they can just kind of go to that database and kind of underwrite. Like I think, look at Google Maps and kind of figure out, can you put the carports in there, all this other stuff? And they're getting smarter and better, right? So overall, it's an opportunity to grow in some way, right? And maybe not growing your portfolio, but you're just getting smarter in real estate. I will say, it has been frustrating because the deal flow has been light. So I've been looking at RV park strategy. I've been looking at single tenant, triple net deals. We looked at a deal in Houston. We just drove down to. Another thing, this track record that we have is very strong. No LP capital calls, happy investors. We're looking at some distressed deals directly with a lender. So that's a pipeline. And I've been using that with some really big limited partners to say, hey, look, we have this pipeline of off-market deals directly with a lender. This is the type of stuff you want to look at. Of course, you're going to say, yes, this is exactly what the type of stuff they want to look at. So we're looking at a bunch of different strategies just because it's a little bit slower in the multifamily space. And the yields are higher in some of these other spaces. And my investors are kind of looking for different product types, but always love the multifamily space.
Excellent. And before we sign off, where can the listeners find out more about you, email, website, and give them the information to join that monthly meetup in Dallas as well?
Yeah. So if you want to email me, my email is nick@leonrepartners.com. So it's my last name. My phone number is 646-334-4989 if you want to text me or email me. I just joined Instagram. I'm kind of like, one of my analysts calls me a dinosaur because I just joined Instagram. So I'm posting and using AI a little bit to kind of create some shorts. So I'm on there as institutional syndicator is my tag. We have a Facebook group that kind of helps promote the meetup. We have it every third Thursday of the month in DFW. We get over 100 people sometimes. It's a great way to connect with people. The Facebook group is facebook.com/groups/CREMNDM. So it stands for Commercial Real Estate Mastery and More, combined. But if you want more information, reach out to me. I love helping people. One of our core values is servant leadership. So we love connecting people, helping people. Feel free to reach out. I'd love to connect with you and see how we can help each other.
So Nick DeLeon worked 15 years in Nuveen, got fed up. Then he started working for another job. 2 years after that, they gave him the axe. Then he said to his wife, we got to get out of here. Let's move. Let's get out of New York. Let's get out of, I'm confused because he was in New York, went to San Fran, and then from San Fran goes to Texas. But it's interesting because he does it right before COVID hits. And most people would have made an excuse. But Nick said, the third time's a strike. I've already been making these excuses. I got to stop making these excuses. I'm smart enough. I know enough. I just need a little bit of help to transform what I'm doing. And then when he joined Jake and Gino, just being in front of people, being with people, surrounding yourself with people that are aspiring to do what you want to do. And as I said, your input shapes your outlook. So if you're around people who are excited, motivated, want to grow, want to learn more. And it's interesting because you don't just join a community and the community is going to do the work for you. Nick has put in a tremendous amount of work. He's talking about core values. So obviously he spent time building in his organization with the core values. We teach on that as well. He talks about the buy right, the finance right, the manage right, short-term versus long-term fixed rate financing. We discuss that as well. He's created his own meetup for people to come and to share ideas, to actually have that go-giver mindset. He comes to all of the events. I mean, this is time and capital that he's invested. So don't think you're just going to join a group and things are going to happen for you. The group is great because it can teach you, it can hold you accountable, but you need to put in the time and the effort and the work. And I think Nick had a strong enough why. He was sick of working for other people. He was sick of creating wealth for others. He wanted to do it for himself. He wanted to create impact for himself, and now he's creating impact for others with hundreds of people going to his meetup and continuing to spread the word. And on top of that, continuing to give his investors the opportunity to invest in multifamily when they couldn't do it themselves. So, brother, I want to thank you for being on the show. This was awesome. And once again, what's your email address again? Shoot it out for me.
Nick@LeonREPartners.com. I just want to say one thing, just kind of commend the community. Been in it for 4 years, kind of been a little disconnected, wanted to reconnect. You connected us together in a new Go Pod. So I'm going to give a shout out to Cody Laughlin, Brad Sweat, and Matt. We've formed this Go Pod now, this pod where it's not just accountability for real estate, it's accountability for wealth, relationships, how to be a better dad, better father, keeping each other accountable for working out. It's been awesome. So thank you, Gino. I mean, you put in, whatever you put into, you get out of it. This little pod that we're doing, it's all through the community. It's been awesome. So thank you.
I'm so happy that you mentioned that because multifamily is the amazing vehicle. But it's not just a vehicle you want to be in. We, as the Jake and Gino community, really focus on family. That's the important aspect, right? And you're focusing on wealth, you're focusing on health, and you're focusing on relationships. And when you get off that pod, I'm sure you're jacked up. You love those guys. And you know what? You get off, you're excited. And I want to just leave this with everyone else. This is what the mantra that I've been speaking about the last few months, and this is what we've been sharing on the Julie and Gino show. If you want to change the world, go home and love your family. It all starts with the family. That's where it starts with. And then from there, man, multifamily is awesome. Let them, it's the family in multifamily, right, Nick?
That's right.
Thanks, brother. Everyone, thank you for spending part of your day with us. Reach out to Nick DeLeon. He's the real deal. If you're in Dallas, go to his meetup. Take care, everyone.
Thanks, Gino.